Hello everyone, my name is Siddharth Shrivastava and I am from Mirae Asset Mutual Fund. Gold has been a wealth creator and it has acted as a strategic hedge against market uncertainties since a very long time. As a safe haven asset, it works well during elevated geopolitical and market risk. It acts as a hedge against elevated inflation, weaker dollar, interest rate cuts expectations, etc. Recently, central bank buying has been a big positive for gold. With low to mid-teen returns in the medium to long term, gold has not only created wealth but also reduced the overall risk of our portfolio due to its lower correlation with equities. Silver, on the other hand, has also created wealth but with higher drawdowns. To put it simply, the return potential of silver may be higher at times, but so is the relative volatility and drawdowns. Reason is that silver has higher industrial applications, so it gets affected by the market cyclicality and the perceived supply and demand for its usage. Both gold and silver are cyclical, silver more so. In last 17 calendar years, silver has outperformed gold in 8 calendar years, but has witnessed much higher drawdowns. For example, in 2013 and 2014 calendar year, silver corrected by around 23.5% and 15.9% respectively, whereas gold corrected by 4.5% and 7.9% respectively. As of July 31st, 2025, while silver has given similar returns as gold in past 3 years of around 24.1%, but gold has outperformed silver in past 5-year and 10-year horizon by giving return of 12.8% and 14.8% respectively versus 11.5% and 12.6% by silver. Since 2008, the average rolling return of gold for 3-year investment horizon is around 12.5%, and while that of silver is around 9.8%. But maximum return observed for same 3-year investment horizon is higher for silver compared to gold. This cyclicality makes it difficult to pick one asset over the other or manage allocation in such a manner where you shift from one asset class to another depending upon short-term outlook. For example, in current market scenario, will you prefer silver or gold, and for how long? If you take exposure in both, then what will be your allocation percentage and how will it change? So in order to provide option to investors, Mirae Asset is launching a fund of fund which will take exposure in both gold and silver. The intent is to capture the potential of both the precious metals while seeking a relatively lower drawdown and tilting towards gold or silver, whichever is looking more attractive. In our investment framework, we will consider gold and silver equally without any biasness, and hence baseline allocation and benchmark is gold and silver with 50% allocation each. We will then tilt the allocation towards gold or silver based on factors like gold and silver ratio, near and short-term momentum, technical and fundamental factors like demand and supply, inflation and currency, geopolitical risk, and rate cycles, etc. Based on relatively better expectations, the allocation will shift towards gold or silver or towards a balanced allocation. This fund of fund will invest in domestic gold and silver ETFs to take desired exposure based on our framework. Since change in allocation is being handled by the fund itself, there will be no tax impact due to such allocation changes, whereas same if done by the investors themselves will possibly invoke tax incidences. The NFO for Mirae Asset Gold Silver Passive FoF is starting on 11th of August and will close on 25th of August. The scheme will reopen for investment on 1st of September. Investor may opt for lump sum or SIP based on their preference. Thank you for watching this video. We hope for your participation in this NFO. For further details, please visit our website or contact us through various available channels.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.